Mark, let's start with that forecast, the idea that broadly the ad market's growth will slow from 10% to 5% in 2023. Does that reflect what you're seeing?
Yeah, and it's occurring for a couple of reasons. I think when you look at like paid search and paid social, especially paid social, like we're talking Instagram, TikTok, those kind of platforms. What you're seeing there, I think, is a lot of concerns about brand safety, around the political discourse on these platforms, and also just the sheer performance. Apple's changes did wind up having an impact. Their changes in terms of identification of devices did wind up having an impact, in particular on Meta and Snap and others. The other thing that's affecting it, when you look at the television market, there's just a supply-demand imbalance. You have a lot of inventory coming online from Netflix, Disney Plus, and other suppliers. And while brand advertisers are literally not spending more, they're spending less. So that's going to create a price war, and you're going to see declining prices. The two of those combined are having a pretty negative impact in the near term on these markets. But I think you'll see more growth in the second half.
2022 was just packed with news and significant events. You think back to February and the start of the war in Ukraine, the impact that had on advertising and the shock that Meta gave us in February. And then by the end of the year, we're talking about ad-supported tiers for Disney, for Netflix, and the market's changed its conversation. How important were those sort of big ticket items in 2022 in shaking up the landscape in advertising?
Yeah, I don't think that kind of news. I mean, obviously, the war in Ukraine then affected the stock market. So I think what we saw is over the summer, advertisers just somewhat panicked and didn't know what to do. But that started to recover in the second half of the year. At least in our business, we ended the year with record-breaking months. So, if that's any indication of a larger market, advertisers, like I said, panicked over the summer. And I think once they got in the holiday season, they realized, look, if we're going to grow our business, we're going to have to spend money to reach consumers. So I think ultimately the market in the second half kind of stabilized. But again, these macro forces, especially like price wars coming from so much supply, those kind of things are just having a big overall effect. I think it will create a better future, though, and meaning that there's no longer this duopoly of just Google and Meta, dominating advertising. I think television is now digital. It's going to really have a big impact on the overall market.
Okay, so who wins there, Mark, from your perspective?
In terms of TV, it's the big players. I think you're likely to see a lot of M&A. So what's going to happen is there are new advertisers coming in the market. I mean, TV is now, the way to think of this is there was this duopoly between Google and Meta. They now control less than half of the advertising market. So their overall control has declined as other areas have grown. And so what has happened is television with connected TV streaming is digital also, and is now benefiting in the same way that digital advertising benefited Google and Meta. And so you see this growth occurring there, more customers coming into the market, they're spending more, it's diversifying the customer base away from just 1,000 or 2,000 advertisers to many more. And so television is coming on strong as this third big scale channel that's now a true digital channel. And I don't think that means Meta and Google lose, but it just kind of means that they no longer dominate in the way they have in the past. And that's really good overall for the advertising industry.
And there's new sort of rules of the game that a load of the companies that you speak to have to learn, particularly when it comes to maybe Disney Plus not wanting to advertise. If you're thinking of alcohol, if you're thinking of politics, we just had the headline about Twitter perhaps going a little bit more into political advertising. But how are some of the clients that you speak to, how are companies and advertisers, marketers thinking about where they place their ads, how they place their ads?
Yeah, I mean, so the advertising market is split into brand advertisers, and that you don't sell alcohol like over the internet, right? So well, you shouldn't be. And so, the brand advertisers that everyone thinks of when they watch sports and watch other TV, there's not actually that many of them. It's about 1,000 to 2,000, but it's what everyone thinks of. It's the direct response advertisers. I mean, Meta has 10 million customers advertising on their platform. Those are the numbers they announced. Google has an equal or higher number. And now you're seeing a lot of those advertisers come to television. And so those advertisers really don't care about those rules. It's the brand advertisers that worry about how their brand is being perceived. The direct response advertisers that really truly dominate advertising, they're like, if you think of the direct response market in the US is 3 times the size of the brand advertising market on television. Those direct response advertisers, they just want to reach consumers wherever they are. They're not worried about rule. They're not thinking of those rules. So all of these things you're seeing in terms of rules like that really just pertains to the advertisers that are not directly measuring the response to their ads, which is what we mean when we say direct response advertising.